Hello everyone, welcome to another edition of ACY Economics. I'm Clifford Bennett, Chief Economist at ACY. And we've been bringing you a long series of these in lockdown editions in great locations out in the sunshine by the seashore and in the park, etc. And we're going to probably miss these soon as we come out of lockdown, as the new Premier of New South Wales is very likely, if anything, to speed up the roadmap out of lockdowns. There will be repercussions for the health system, but the economy will be opening up. That said, the economy's reopening will not be to the degree of strength that it had beforehand. That's just not possible without the same levels of stimulus and things that were in place a year ago, which helped the original recovery phase. They're not there, so we're not going to get that. And also the length of time in lockdown for New South Wales, Sydney particularly, and Melbourne, Victoria, has been so extensive that real pain has been done to small, medium-sized businesses and even some large companies. And many small businesses aren't coming back. I did a walk along a main shopping thoroughfare in the area recently, and it's a reasonably well-to-do area. And there are 18 storefronts that had closed, and only 2 had any signs of their being taken over by someone else and re-established. So a lot of people, small business, have kind of given up because of the ongoing uncertainty. I guess, though, this roadmap will create some degree of certainty. In other words, it would take a really very difficult and challenging health crisis for us to ever go back into lockdowns or severe restrictions again. And hopefully that will be the case, and more importantly, that we won't have the health crisis. Just remember, vaccinations are a great idea for the community, and they definitely help hugely, but they do not solve the problem. So please, if you've been vaccinated, please do not act like you're bulletproof as we reopen. Do continue to take personal care, be responsible for yourself and your environment. In terms of markets, I guess I've taken a little time to get to the market because the market's actually in crash mode again. This morning I wrote a rather long and I think interesting piece, and I coined a new term, swingabouts, but that was largely tongue-in-cheek. I think the important thing to note is that we're having these big daily ranges that are quite extensive, and then closing on the highs, and it looks all very well. Then the next day, closing on the lows of a similar move, or 100 points up, 100 points down, etc. And that's been an ongoing process. I did say that the outlook was still bearish despite Wall Street's very strong rally yesterday. I thought that was just another rally that's going to fade. There's a lot of enthusiasm in the market, but it's not backed up by the fundamental reality or what's going on in the world. And I think really earnings are probably peaking about now. We're going to continue to have high inflation. Delta is going to continue to wreak havoc with supply chain disruption, but all of this dislocation, if you like, has now unraveled. It's almost as if, there's a few tectonic plates around in the economy and someone's given the whole world a bit of a shake. So all those tectonic plates have loosened up and they're starting to come to the surface and cause real havoc. So I think it's real underlying fundamental economic problems that are coming home to roost now in countries like the United States and Australia. And I keep mentioning the United States a lot because it's still the major sentiment factor for most national markets around the world, but particularly for the Australian market. Particularly as we come on that time zone straight after the US, we're always greatly led by what's happening in the US. But whereas the US economy's probably had a more effective reopening, and is again now already slowing, I think that's the kind of thing we're going to see for Australia, but not even as extensive this time. I think we're going to see a very modest, disappointing to the great majority recovery out of this, and then a subsidence that begins to really concern people. All of this, of course, will come to pass and unravel over several months going forward, but it looks as though markets are starting to understand that there are real fundamental economic problems and challenges ahead. And we're already seeing, the Bank of New Zealand, Reserve Bank of New Zealand has raised interest rates today from 25.25 to 0.5%. It really shouldn't spook markets at all. In fact, Really, interest rates would have to go up to around 2–3% before they should even begin to impinge upon equity markets. But of course, they'll be a big story and that will weigh on market sentiment to some extent, well in advance of when it should, but it will nevertheless happen. The Reserve Bank, still the world's greatest, sit on your hands bank. We're not going to do anything. What a great approach to monetary policy. So all of that stimulus, though, has run its course. There aren't many levers for governments to pull, and the outlook is looking bad on the economic fundamentals. And what's really worrying is the nature of the price action that's rolling over now into those economic fundamentals and is likely to overshoot them. Markets always overshoot. Remember, markets are never right. They're always wrong. They're always trying to find right. That's why they move about. And they always overshoot, retrace, hence volatility and parallel trend patterns. So again, I guess, and I've been saying it quite a bit, but maybe I've said it in a slightly different way today that helps a little bit more. But given the economic data in the US on Friday, which was the ISM Services Index, held up better than I thought it would. But again, it's holding ground, and actually, I've got to say, I've probably got the services sector in the US wrong, but certainly unemployment is rising in the US and certainly manufacturing is taking a dive. So maybe services is just holding up for a little while before it too begins to fall. But the outlook is definitely still overall very much a slowing US economy with the Fed really nothing left to do if the economy slows too much. That's the real worry. That's what equity markets have to begin to price in. Clifford Bennett, Chief Economist, ACY Securities. Thank you very much.